Now, you mentioned KiwiSaver earlier. Now, that's been a huge area of growth over the past 3 years since the FMA's been around. Are you comfortable with the regulatory regime we've got in place for KiwiSaver now? And you've made some comments in the past about perhaps we ought to have prudential regulation of KiwiSaver. How comfortable are you with that regulatory regime now?
So when I made those remarks a year or so ago, we had no licensing regime for fund managers, and we had not in fact started the process of licensing statutory supervisors or trustees. And since that time, Gareth, as you'd know, there's been a significant increase in the regulatory standards. So we've now gone through the process of licensing statutory supervisors and trustees, and not every applicant for licensing got through. So that's been an increase and an improvement in the system. From next year, under the Financial Markets Conduct Act, fund managers will also be licensed, and so there will be new standards put in place. Now, is it the same regime as Australia? The answer to that quite clearly is no. And I think there might have been some misinterpretation that I was being critical of the government for not having a prudential regulatory regime for KiwiSaver. I wasn't being critical, I was simply saying the two regimes are not comparable. Is there a business case, or is there a regulatory case, or even a political case for implementing an APRA-like model for KiwiSaver in New Zealand? I think it's something that should be looked at. But at the end of the day, the decision doesn't rest with the regulator, it rests with the government. And with the implementation of a prudential model, that will obviously entail some cost. But if we get the right standards in place around things such as liquidity, capital adequacy, risk management, unit pricing, outsourcing, all of the things that I regard as sound prudential governance or prudential regulatory steps, then whether you need a separate regulator to do that or not is really by the by. At the moment, the only regulator for KiwiSaver outside the IRD in terms of its work is FMA. And my question is that too big a burden to place on one regulator? Because at the same time, we're also relying on trustees to do their job, and in time we'll be relying on the fund managers to do their job. By comparison with Australia, the model there splits that role between ASIC and APRA. In New Zealand, we are placing a great deal of reliance on frontline entities like trustees and fund managers. Is that the right thing to do? Well, only time will tell. But as the KiwiSaver total funds under management get up to around $50 billion in the next decade, you'd have to ask yourself, is it time at some point to revisit the model and say, have we got it right? Are we placing too much trust in the hands of people who themselves are involved in the market of KiwiSaver?
One of the key things to come out of the finance company meltdown was also whether retail investors had a proper understanding of risk when they were investing, and also whether financial literacy was good enough in New Zealand. A lot of people thought not on both those questions. Just wondering to what extent you still think those two things need to be improved in this country, and what can be done to improve them.
Well, I agree with you that I still have misgivings about whether the average investor understands about risk and the risk of being in the market. I still think that there is an assumption out there that when you invest in the market that it's capital guaranteed. In the same way as, if the bank goes under where my deposit is placed, I'm going to get all my money back. Well, the reality is there is no place in the world in any financial market where you are absolutely capital guaranteed. And indeed, that's your capital, but of course in terms of your projected investment return is not guaranteed as well. So there does need to be a conversation and an understanding that when you invest, the higher the rate of return, the higher the rate of risk. And there is a chance that you won't get your money back. Does that mean people shouldn't invest? Absolutely not, because the only way in which you can improve your lot and advance is to take some risk. But it needs to be educated risk, and the risk needs to be appropriate to your own personal circumstances. If you're somebody who's only got a very small amount of money to invest, and you need that money, you need to rely on it being there at the end of the day, then don't take a high risk investment. We saw in the last decade that people thought they were diversifying their asset in terms of their investments by spreading it across several finance companies. That's not diversification. We see it today, particularly here in Auckland, with people putting all of their investments into property, into residential property for renting purposes. Again, that's not diversifying your assets. So this understanding of the way in which markets work, the nature of risk and pricing risk in a way that's appropriate to your own circumstances is still something that we've got a long, long way to go on. And it was never going to be anything we could fix in the first 3 years of FMA's existence.
You also mentioned the Financial Markets Conduct Act. It's a huge piece of legislation. That obviously is going to be a key area of focus for the FMA over the next year or two. What in particular are key aspects of that in your mind, and what other areas would you like to see the FMA focus on over the next year or two?
Well, look, there's three big buckets. The first is the licensing regime, which I've already talked about in terms of fund managers, but there are other participants as well, such as peer-to-peer lenders or derivatives dealers and others, that for the first time in New Zealand will be licensed. And that's not something that we should underestimate. To have the whole life cycle of the financial product regulated and licensed is a huge step for New Zealand, given where we were even 5 years ago, when financial advisors didn't need to be regulated. But from next year, right through to 2016, the end of the transitional period, you'll have every part of that financial product chain under some form of regulation, which I think is a huge improvement. The second most significant piece is around product disclosure. We've talked openly about the fact that we want product disclosure to be more simple, to be more clear, concise and effective, so that ordinary, everyday retail investors can understand what it is they're seeking to acquire and what the risks of that investment might be. So those changes in terms of simplification will come into effect as well. And then the third piece is around the fair conduct and governance changes, which will mean that some of the things that the Commerce Commission has been doing in terms of the Fair Trading Act, some of those principles now come into our regime as well. Now, the reason we say this is the most significant thing that's happened is it isn't just about implementing a piece of legislation. It's around a change in behaviour and a change in which products are going to be structured and then marketed and sold to the average New Zealander. We're seeing it within FMA as not just a project, but as a whole of organisation program. That's why I took Sue Brown out of her day job, and she's running the program as a discrete piece of work that's going to affect all of FMA's operations. We see it as fundamental, once in a lifetime change in the way in which the market's going to be regulated and the way in which the regulator is going to operate within those markets. And the most significant and sustainable message that I'd like people to take away from this is that it's not just a tick the box minimum standards type exercise. This is about putting your clients first and acting in their best interests. And entities that operate under that principle will be successful under this regime. Those that take a minimalist, legalistic approach to just doing the bare minimum possible, I think are going to come unstuck.
Certainly something to keep an eye on then. Look, as you leave this month, do you have any regrets?
I think, in 3 years' time, we've done an awful lot. I said, we should run, not sprint, but at times it's felt like a sprint. I think we've engaged well with the market as best we can. We've issued more guidance and assistance around compliance than our predecessors did. We've been very active in that space. Obviously, we've been very active in the litigation and enforcement area. Every matter we've taken has been successful. But the missing piece in the puzzle for me has been around investor education, which I was just talking about before. For me, it would have been ideal if we could have also got out into the community more, spoken to mums and dads, understood their fears, listened to some of their experiences that they had during the GFC and the collapse of the finance company sector. I think that would have been a really important and appropriate thing for us to do, to sort of show the human face of FMA. At times in this job, particularly as chief executive, it's very easy to get bogged down in internal governance and the bureaucracy of running an organisation and approvals processes. Ideally, in a perfect world, and if I had been able to stay on for longer, I would have liked to have spent more time in the community, out in the regions, and actually talk to real New Zealanders about what their experiences were and what they're missing out in terms of their own education and understanding of the way in which markets operate. So I'm hoping that Rob will get a clean sheet of paper and be able to have the time and the interest to do that sort of thing, because I think that is where FMA of the future should position itself, very much as there to assist and support a growing population of what I hope are confident New Zealanders in a successful, thriving financial market. But, it's up to him now.
Thanks a lot for that, Sean. That's Sean Hughes, who's the outgoing CEO of the Financial Markets Authority, and I'm Gareth Vaughan at interest.co.nz.